Thank you for standing by. From the management side, we are represented by Mr. Arun, who is the MD of Wonderla Holidays, Mr. Nand Kumar, who is the CFO. Without further ado, I now hand over the call to the management. Arun, over to you.
Thanks, Nigda. Good afternoon, everyone. On behalf of Wonderla, I would like to welcome all of you to our Q4 earnings call of FY18. In FY18, we received an aggregate of 2.5 million visitors, an encouraging 5% rise in average ticket revenue per visitor. The Indian amusement theme park industry has been growing at around 17, at a CAGR of more than 17.5%, with an annual revenue of about 17 billion. This is estimated to grow to at least rupees 40 billion by 2020. We believe that we are placed very well to exploit this growth with our 3 operational parks and our 4th park, which is to be launched in Chennai, where we have already acquired 62 acres of land. Our parks increasingly promote social wellness and bigot fun and learning for children and their families. A major boost was received earlier this year when the GST Council reduced the taxes on admission charges from 28 to 18% to the sector. Further, a strong 23% rise in average non-ticket revenue is also an encouraging sign of our increasing engagement with visitors. Let me give you a brief about the financial performance for the quarter. For Q4, our revenues decreased by 7.5% YOY from 59.3 crores to 54.92 crores, driven by a 12.1 YOY decline in footfalls, partially offset by 3.8% growth in average revenue per visitor. On a like-to-like basis, this growth in revenue was at 2% considering the provision that we have made for disputed taxes in Q4 last year. The share of non-ticket revenue improved from 25.3% in Q4 FY17 to 28.7% in Q4 FY18 because of new F&B offerings at the restaurants and merchandise sales. In-park spends grew by 4.9%. The Q4 FY18 EBITDA increased substantially by 79.2% from 8.5 crores to 15.2 crores. The EBITDA margin has almost doubled from 14.4 to 27.8 in Q4 FY18. Q4 FY18 PBT increased by 58.4% to 4.2 from 4.2 to 6.7 crores. PBT margin increased by 7.2% in Q4 from 7.2% to 12.3%. Q4 FY18 PAT increased by 9.1% from 3.3 crores to 3.6 crores. PAT margin increased from 5.7% to 6.7% in Q4 FY18. Q4 FY18 cash PAT increased by 37% from 9.8 crores to 13.4 crores, indicating a continued generation of healthy operating cash flows. We are also debt-free, although we were almost debt-free in the last year, but we are completely debt-free as of now. We would also like to inform you that the board has recommended, subject to approval of the AGM, an increased final dividend of 1.5 per equity share compared to 1 per equity share in FY17. Our dividend payout ratio stands at 26.5%. With that, I would like to now open the floor for questions.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Avnish Roy from Edelweiss. Please go ahead.
Hi, Arun. Thanks. Yeah, hi. My first question is on Hyderabad. You have introduced new rides now. Latest is Mission Interstellar. How do you see FY19 in terms of footfall for Hyderabad? Why I'm asking this is you cut your guidance from 0.7 to 0.67, but ended the year at 0.64. And normally in the second and third year, we do see pickup in the footfalls. Here it has in fact come down a bit only.
Yeah.
What are the issues? And do you see a good recovery in FY19?
Yeah, so like I told you, I mean, our pricing was completely haywire in FY18 because our prices changed 3 times. From April to June, we had one pricing. Then we were in the service tax regime. Then we had another pricing from July to February, when again the tax change, the GST for the amusement parks was brought down in February. So I think, there was a lot of confusion regarding pricing. And that's the feedback that we're getting. And our price was very high. We passed on all the GST impact to the customers. And obviously, it definitely impacted our footfalls as well. But that is a policy that we have decided. And as you are very, very well aware, that I've explained to you this before, that that's the policy that we have. Any taxation will always be passed on to the customer. You don't want to try and, absorb it. So for this year, our policy is to try and maintain pricing. We, in fact, have not taken, I think we've taken a 2% price increase overall. That's it. So it's very less compared to the previous years. And our goal is to try and maintain pricing across all the 3 parks for the whole year without too much fluctuation. And all our marketing communication is, you will see if you see any of our communication, it's all pricing-led communication, and we are talking about how we have dropped pricing this year compared to last year, which is true because our prices have come down by about 10%. So that is the way we are doing it, and that has helped us a lot. For example, in this FY19 first quarter, we are seeing some good growth in Hyderabad, especially. It is growing, I think, around 17% growth in footfalls I'm seeing in Hyderabad. And Cochin is also finally showing some growth in footfalls. But it's too early to say. It's only 2 months of the year, so I don't want to make a prediction based on that. But we are hopeful that, our footfalls will start growing from this year onwards.
One follow-up here. The Q4 ARPU in Hyderabad is much lower than the full year. That's entirely because of taxes, or have you actually cut in terms of real terms also?
No, it's only because of taxes that the revenues have dropped. But otherwise, there has been growth across. So even all the parks put together, we have actually grown 2% on revenue. It's only on a like-to-like basis. It's only because of the taxation. In earlier years, we used to provide for the taxation under expenses, and that's the reason why you see the net revenue lower.
So my second and last question is on the resort. So in the last call, you had mentioned the strategy to move towards more of retail rather than corporate. So if you could tell us in that journey how much progress has been made, and when do you see here growth coming? Because in most of the other hotel business, we have seen companies record good growth. And any plans to kind of hive off this? Because we have seen one of the other listed players hive off the hotel, or you have no plans for that?
No. I mean, for us, this is like a very small drop in our revenues. I mean, it's only like 10 crores. Or what is the resort revenue?
The resort business is only about 4 to 5% of our total business.
Yeah, it's very small for us, and it's more of an experimental thing for us. And we want to go from more of corporate to a more of a family-oriented kind of this thing. So we are tying up more with, your Paytms and Clear Tips and all the online OTAs. So that is being done more aggressively now, and we are seeing a bigger jump in terms of bookings, direct bookings to our resort as against corporate bookings, because corporate bookings are very highly fluctuating, and that's one of the reasons why we lost occupancy last quarter, because the year before we had a lot of corporates who had taken the resort for bookings, and we were dependent on a few players to give us a lot of bookings. So we want to move away from that strategy and try and get more retail families to come and book the resort. And so that is a conscious effort that we are doing. So you might see some dip in resort revenue this year, but we are hoping that we will definitely improve our occupancy, and then hopefully it will, start moving up.
And one follow-up here, isn't the resort business more dependent on the overall footfall in the Bangalore?
Yes, it is also dependent on footfall. So if you see like our footfalls in Bangalore has dropped, so obviously the resort also will show a slight drop.
Okay, that's all from my side. Thank you.
Yeah.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Gaurav Agarwal from ENR Advisors. Please go ahead.
Oh, congratulations, sir, and thank you for the opportunity. I'm good, sir. I'm good. Thank you. Sir, just two questions. For the base quarter of current quarter for Q1 FY19, and, what was the tax rate that we were charging in Q1 FY18?
So Q1 FY18, each park had a different way of charging taxes. In Bangalore, last year we were actually charging only entertainment tax. And we've made a provision for the service tax. In Kochi, the tickets were split between admission fees and park maintenance fees 50-50. And there were no entertainment tax in Kochi, but we had a service tax which we were paying on park maintenance. In Hyderabad, it was... it's again 50-50 admission fees and park maintenance fees, and the entertainment tax was at 20% and the service tax was at 15% in Hyderabad.
20%. So, sir, for Bangalore, how much was the entertainment tax? Because service tax, we were anyways not charging it. We were taking a provision in our P&L.
Yeah, entertainment tax was at 5% in Bangalore.
Okay, so 5% tax rate versus 18% now. Is the understanding correct?
Yes.
Okay, and for Kochi, sir? I'm only interested in, sir, that taxes which you were charging. What you were taking in the P&L, that doesn't matter.
Yeah. So for Kochi, I told you there is no entertainment tax there because there's only a municipal tax which is based on investment, and that's taken as expenses in any case. The service tax was paid on the park maintenance fee, about 50% of the total fees, and at 15%. So service tax is common across all the parks. The entertainment tax are more.
15%, not 50, that is 7.5% on a total level.
Yeah.
For Kochi, 7.5%. If a bill was 100 rupees, so 7.5 rupees was the tax part.
Yes, yes. And it will not be exactly 7.5 because what we do is we keep admission fees at 500 and the park maintenance fees as the balance. Okay. And hence, depending on the ticket prices, this could change. So it may not be exactly 7.5%, but yes, if both are same, if the ticket price is around 1,000, depending on who comes into the park, then it is 500.
Okay. So finally, if you can help me at the gross level, what would be the difference between this quarter versus last quarter? Let's say this quarter we are charging 100. What was the figure we were charging last quarter?
It's roughly about 7%. I can give you the exact numbers after the call, but it's roughly around the 7% range. 7%
increase on a YOY basis, right?
Yes, yes. And the remaining is shown as the provision.
Fine. And lastly, sir, can you give me park-wise operating expenditure breakup for FY18? If you have it right now, then it's fine. Otherwise,
we'll have to send across, and you can route it through our IR agency.
Sure. Thank you.
Thank you. The next question is from Kaustubh Pawaskar from Sharekhan. Please go ahead.
Yes, sir. Thanks for giving me the opportunity. So my question is on the Bangalore park. For past few quarters, we've been seeing that Bangalore's footfalls have been in a declining trend, especially in the groups we are seeing substantial decline.
Because of the pricing.
This is the only reason, or is there something else that slowed down in the
IT? Nothing else. Pricing is a big... actually, Bangalore park is our highest priced park. Even it's at least 15% more expensive than the other two parks. So the price increase in the absolute quantum of increase in Bangalore is much higher. I think it's about how much was it compared to the previous year? It's gone up pricing. Average ticket price.
So the last quarter we were at, so our pricing philosophy also has changed. We've moved into a peak season, off-peak and a weekend pricing, whereas in the last year we were only following a regular day and a peak day pricing. So basically what we have done is in Q1 we have actually reduced our...
Q4. What I'm talking about Q4. They're asking about Q4. Why did the groups footfall drop? What is the pricing?
So Qtr4 pricing, was it about 909 on a regular day for an adult?
Yeah, so it's gone up from?
Last year it was at about, weekly adult was about 1100 and actually it was at about 1320 weekends.
Yeah, so it's gone up from 1100 to 1300. So there's a 200 rupee difference in the ticket between last year, which is FY17 and FY18. So that is a huge difference actually.
Right, sir. But sir, now since we are not taking substantial price increase or almost 2% price increase, should we expect Bangalore to also start seeing an improvement in terms of footfalls?
Yeah, we want to see improvement in footfalls in all three parks, without exception.
Right. And so, in your opening remarks, you mentioned that you are seeing about 10 to 12% CAGR growth in the theme park industry in India. What would be the key drivers? Non-ticketing revenues is one, but where do you see footfalls?
Yeah, the revenue drivers will always be footfalls. Non-ticketing revenue is an icing on the cake to, just help you augur your ARPUs and things like that. But, I mean, your primary revenue drivers is always footfalls.
No, sir, why I'm asking this because your non-ticketing revenues, I think it has gone up from, 20% to now it is almost reaching to 30%. Yeah. And if you look into the international market, it is, the breakup is almost 50-50%. So are we also, looking, at our non-ticketing revenues, to reach to about 50%? That is your...
Definitely, yes. So, I mean, I think we do feel that as our parks are becoming larger and our ticket prices are going higher, people's expectations of F&B and merchandise and memory space are also increasing. So we are selling higher priced meals, higher priced merchandise, higher priced photography, things like that. And definitely, you will see our non-ticket revenues growing, and you've already seen that. The only issue that we are having is our footfalls. Again, that is because our ticket pricing has been very fluctuating and it's been going wildly up and down. Hopefully, this year onwards it's going to be stable, and then we can, start growing our footfalls.
Yeah, but sir, from the longer term view, can we expect, footfalls to stabilize at about 4 to 5% kind of a CAGR?
We are looking for a more aggressive growth in footfalls for the next couple of years, because we have lost footfalls in the last 2 years, especially in Bangalore and Cochin.
Right.
And especially Hyderabad also, we were hoping to get a 7 lakh visitors this year, so we want to, claw back some of that growth this year and next year. So we are not really focusing too much on price hikes for the next 1 or 2 years. We are looking at how to improve our footfalls either through direct sales, direct marketing, or through social and things like that. So that is our focus for the next 1 or 2 years for all three parks. So, I mean, we are definitely going to be depending more on footfall as a company for the year or two to show revenue growth, not on non-ticket revenue.
Right, sir. And two last one, if I can. Sir, we have seen significant improvement in margins in FY 2018, and you have taken a lot of initiatives for that. How much of this will get, continued in FY 2019 and 20, or we might see, margins standing, in this range only?
No, we want to definitely improve our margins also. So we have done a lot of things. One is our utilities. A lot of our utility costs have really come under, a scrutiny, and we are now doing solar power purchase, and we have installed solar panels. So our utility costs are coming down. Our people cost, which is our highest cost, is also coming down. We are rationalizing our workforce across all levels, and a lot of changes have been made. In fact, we've done a huge rejig of our management also, as you're aware. So, I mean, a lot of things have changed in terms of our whole philosophy towards people. So hopefully we can maintain a lot of this as well, because people are our biggest cost, and so we need to look at that a little more carefully. But having said that, so people then park utility costs. The other big cost is spares and maintenance costs. That's also come down compared to the previous year, but that could vary from year to year. Some years we might have more costs. Can't do a prediction on that. The other cost which we are also trying to rationalize a lot is our marketing costs. Last year we had a brand relaunch and things like that, so we spent a lot more money. on marketing this year that we've been able to bring that down. And we are trying to do more performance-based marketing and referral-based marketing. So hopefully, our marketing cost or cost of a customer acquisition, we want to bring that down. So that's also a deliberate attempt. So I think with all these things, we will definitely be able to improve margins in FY19. And then coupled with a footfall growth, I think we will get back to where we were a couple of years ago.
And added to what Arun said, ours is a fixed cost business, and the moment we are able to get more footfalls, it actually flows through to the bottom line and the margins improve considerably.
Right, sir. I was coming to that only.
Yeah.
Because
which means we should be able to increase our margin percentages and in line with our footfall growth or even beyond that.
Yeah, hope to see the margins coming back to about 41-44%, which companies used to get earlier. My last question is on the Chennai project. How is it going? And, at this position, when do you expect the project to get optional?
Chennai project, we are currently in a wait-and-watch mode. We have made a representation to the Tamil Nadu government regarding the local body taxes. Unless that is resolved, we will not build the park because that is a decision we have taken, and we have communicated that to the Chief Minister as well, because we feel that 10% LBT on top of 18% GST makes the project, relatively, it's not going to be very profitable for us. So that has been very clearly communicated to Tamil Nadu government, and I think there is a positive sign coming from there. And so hopefully in the next quarter or so, if we get some kind of relief on that, we will start work. We are ready to start work. Everything is ready. We have our designs ready. We have even recruited some people to help, the construction work in Chennai. The design of the park is almost complete. A lot of things have been already done. It's just that we don't want to commit that investment until we get something in writing from the Tamil Nadu government.
Right, sir. And so one last, are we seeing any impact of NIPA on our footfalls, on Kochi Park footfalls?
So actually Cochin is growing right now, so we are not seeing anything. Luckily, the season is almost over for us. So hopefully, we will not see a huge impact. So it should be okay.
Okay. Thank you. Thanks for the opportunity.
Thank you. Next question is from Tejas Shah from Spark Capital. Please go ahead.
Hi, Arun. Hi, Anand. Thanks for the opportunity. Sir, first, I believe that we had a very steep increase in prices in last couple of years. Then was just curious what led us to take 2% price hike, even though minuscule, but why price hike this year again?
In fact, we have not taken a price hike. It's just that we have a very complex pricing system. So some categories which we felt we could increase, we have increased, whereas some categories we have reduced. So it's that's a very complicated process. How we look at our price matrix. So some sections, for example, like for example, full-paying child ticket, we have been able to increase that. Whereas a full-paying adult, we've decreased that by 1 or 2%. So it's a very it's a case-to-case. In a case-to-case, every segment of our footfall, we have tweaked pricing. More or less, we've left it flat, which means we've not taken any price hikes for the year. But some categories have seen some price correction or price increase. So that is why I'm saying 1 or 2%. So, but realistically, it's almost flat.
Okay. And sir, whether we passed on the benefit of this 28 to 18% GST to consumers fully?
Yeah, we have passed on. In fact, all our communication to the guests, our marketing communication is on price reduction. So this year, we have already rolled out that because we did find that pricing was becoming a concern, and we were losing some of our footfalls to the smaller parks, the regional parks. So, we've been able to clarify that, and so we are definitely looking at pricing more aggressively to see how we can, get back footfalls.
And so you sound relatively positive today on footfalls versus the last quarter's con call. So
yeah, I mean, so far it's looking good, but hopefully it'll continue for the year as well.
But so in your opening remarks, you mentioned about revival in Hyderabad and Kochi. But
Hyderabad, we are very confident of revival. In fact, Hyderabad has, it's already beaten our estimates in terms of revival of footfall. So we are very happy with Hyderabad. Cochin is also revived. Bangalore is it's showing a slight revival, but it's not as big as we expected. But I'm definitely sure that within the next 2-3 months, it will revive in Bangalore also. Because even if we do a price correction for this news to reach our target audience, it does take some time. It's not going to be an immediate, once we announce that this is our pricing, we can't expect our footfalls to start growing immediately from the next day or the next week or the next month. It usually takes some time for this news to trickle down, and especially for groups who are dependent on agents for bookings and things like that. So there is a bit of a trickle-down effect there, but we will see a growth is what we are hoping.
Sure. And so, lastly, if you can give some guidance on Hyderabad park footfalls which you are targeting this year.
We're looking at 7.5 lakh. That's the kind of number that we want to reach. It's a pretty lofty goal, so that's more than 1 lakh of extra footfall this year. But that is the way that we want to, see whether we should start growing this year.
Sure. That's it from my side, and sir, all the best.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. Next question is from Rohit Patti from Marshmallow Capital. Please go ahead.
Thank you for the opportunity. Sir, I was wondering if you could explain a little more on the marketing communication that we have done this quarter on, because I see we have tied up with PTM, Savari, and some of my friends.
Hello? Not cut.
Mr. Rohit Patti, we can't hear you. If you can hear us.
I think that got disconnected.
We've lost the line from Mr. Rohit Patti. We'll move to the next question. Before we take the next question, we'd like to remind participants once again that you may press star and 1 to join the question queue. Next question is from Rohit Chavan from GEPL Capital. Please go ahead.
Yeah, thanks a lot for the opportunity. Sir, I wanted to understand the competitive scenario in our industry. So I wanted to understand what would be the replacement cost of our Cochin park and that of our Bangalore park, considering the today's rupee amount.
Today's rupee amount replacement cost will be in excess of 350 crores for each park.
350 crores. So because that's an extraordinary big advantage for us, because we have, our capex was in the range of, I believe, in the range of 60 to 80 crores. So that gives us a quite...
Cochin is about 120 crores.
That's it, because they were all invested. Most of it was invested around the early 2000s. We've done a few refurbishments in the last couple of years, but that's not been very significant. But, yeah.
So Cochin Park, if I'm not mistaken, we've invested about 120, 130 crores. I think Bangalore is about 150, 160. Hyderabad is at about 280, 290, I think, that kind of a number. So, Hyderabad is our newest park, and even though it's slightly smaller than the other two, it's already crossed, it's almost 300 crores, right? So that gives you an idea about replacement costs.
Yeah, understood. Thanks a lot. So I can assume the similar sort of investments for the Cochin and the Bangalore park as well, right?
Yeah. Now, I think in our portfolio, all 3 parks are almost the same, except that one big ride which we have introduced in Hyderabad. That ride does not exist in the other 2 parks. Other than that, they're almost the same.
Yeah, understood. Sir, on this ride thing, I also have one question, because what I understand is we have developed a park on only 30 acres of the land on Cochin and at Bangalore as well, in that range. So we have a good land back which is not yet used. So I wanted to understand how are we going to add rides to this park year on year, and what has been the past trend year on year? How many rides do we add?
Depends on the kind of attraction that we are adding. Some parks, for example, Cochin never had a big roller coaster. We just added the roller coaster in Cochin. So a roller coaster needs about 2 to 3 acres of land. So it's a large machine. So if we're adding something like that, obviously we'll add more real estate into the park area. But other rides, like, if it's a carousel or something, water slide, things like that, they hardly take any space. So we will the park size slowly gets bigger as time goes by. But every time we add a huge, big attraction, with a large footprint, obviously it adds more area into the park.
Exactly. That's my question, because that is very important activity from our company side, because that would ensure that the repeat footfall would be there. So because of the new rides,
we've been able to do. We've been doing it for almost 18 years now.
Right. So my question, I would ask this question.
It was only a 10-acre park. Now it is almost 30 acres in size. So yeah, that's different in size.
Okay. That was my follow-up question only. So we improved our land size from 10 acre to 30 acre in all the parks?
Yeah, so like for example, Cochin was a 10-acre park, now it's a 30-acre park. Bangalore was always a 25, 30-acre kind of size, now it's a little bigger than that. Hyderabad is about, again, another 20, 25-acre kind of size.
Okay. So can you also give this kind of information in terms of rides? How many rides were there and how many rides are today?
Yeah. Hyderabad and Cochin, Hyderabad has the lowest number, I think, around 50.
44 rides.
44. I think
18 wet and 26 dry rides.
Whereas Hyderabad, so Cochin and Bangalore, older parks, they have more rides. I think about 60.
Kochi has 56, 22 wet rides and 34 dry rides. Okay. And Bangalore has 62, 21 wet rides and about 41 dry rides.
Yeah.
Okay. No, I was asking how many rides were there previously and how many rides have you added over the period of time?
So Cochin we started with about 10 or 15 rides. Very small.
Okay. And I can assume a similar sort of range for Bangalore Park as well.
Bangalore was started as a bigger project with about 45 rides, like Hyderabad. And then we have slowly creeped up to about 60 now with the footfalls increasing and things like that.
Right. Sir, my next question would be, because I have read it in some of the reports that we have been able to raise our prices by 10% every year, ticket prices. So, do we feel the same pricing power we have going forward over a large period of time? I'm not talking about 1 or 2 years, but I'm talking about 5 years, 7 years down the line. Do we see what kind of CAGR do we see in the ticket prices?
The last 2 years are exceptions because our pricing has varied very, very out of our normal range of pricing. If you remove if you go back to not increasing prices this year and maybe doing a mild to moderate price increase next year, we will come back into the same curve. And if that is the case, we will still be able to increase prices by, 7 to 8% every year. That's what we feel.
Okay, so you believe that you have a pricing power of 7 to 8% year-on-year CAGR, right?
At least, yeah. And years we usually add big rides, we will increase our prices a bit more.
That would be that's wonderful. So, sir, my next question would be, so basically what you want to say that even at 1,200 rupees or 1,300 rupees, you don't feel that now you are capped at price, and to increase footfall now you can't really increase the prices by.
When we started the park in 2000, our ticket price was only 200 rupees.
Exactly. 200 to 50 rupees.
We are not really capped by any kind of, and we don't have direct competition as well. So it depends on what we feel is the value of the entertainment that we provide. And we are not unreasonable in that, and we've been able to maintain that pricing. And I think pricing across all entertainment options are going up every year, whether it's multiplexes or whatever else, right? So we see that, so generally I don't see costs coming down in this sector, at much. And this is world over phenomenon as well. All the parks usually take low single digits, maybe in the Western countries, and maybe higher single digits percentage price increase.
Right. Understood. And sir, my last question would be, because our business is a fixed cost business, so it matters to us a lot that we have a break-even footfall. So considering a nominal pricing of 1,000 rupees a ticket price or total average revenue, what would be our break-even footfall for every park?
I think we get about 1,200 to 1,300 visitors a day per park.
1,200 to 1,300 visitors per day. But what would be the break-even footfall yearly?
That's what I'm saying. Our average should be about 1,300 footfalls per day.
Okay, so if we hit this mark, we are breaking even.
Yeah.
Right. Okay, sir. Thanks a lot for your time. Sir, one last question. Can I have some details where I can ask more queries if I have?
You can email us.
Yeah, okay. So that would be your IR?
Yeah, IR, yeah.
Yes. Thanks a lot, sir. Thanks a lot for your time and good luck.
Thank you.
Thank you. Next question is from Rohit Poti from Marshmallow Capital. Please go ahead.
Thank you. Apologies I broke off last time. Sir, I just noticed that there was a lot of change in our marketing communication this time, it looks like, because we have tied up with Paytm, we have tied up with Savari. Some of my friends in Cochin are saying that they are getting offers, discount offers, etc. in their apartments itself. So could you elaborate on that a little bit more? What all have you changed this quarter on?
Yeah, so we've slightly changed our marketing philosophy. Like I said in the beginning, we are trying to see how we can leverage direct marketing networks. So you will see, and also OTAs, which is, online travel agents, things like that. So we are doing more of those kind of tie-ups, and it is showing us, basically we are just widening our footprint of where our tickets are available, and a few offers that we're doing and experimenting in, like apartment blocks and things like that. So a lot of that kind of initiatives, a lot of them have been done, and there is, the initiatives are varying between different geographies. I think Cochin will be different from Bangalore, will be different from Hyderabad. So a lot of small initiatives have been done, and that is, that is giving us good results.
Okay, and I'm guessing that in Hyderabad, that we are going beyond Hyderabad right now and trying to get footfall from the nearby districts as well.
Yeah. So that is also because Hyderabad is still a very new park. Our first 1 or 2 years, we usually focus on Hyderabad itself to develop our BD partners and things like that. And so that is still on, but slowly now we are spreading out to, the other towns like, Rajmundry or Vijayawada. A lot of areas where, we can get footfalls from.
Understood. The next question I have is, this is taking off from the previous participant's question. From what I understand, the strategic advantage that we have when we are a first mover in any of the geography is enormous in this business. Connecting that to the Chennai park, we launched Hyderabad in 2016, and it's been almost 2 years, and we've not begun construction on a new park because of external circumstances, obviously. So how do you ensure that your time to market is reduced going forward in newer geographies? Would it make sense to possibly have 2 parcels of land at any point of time so that, you can always have construction going on at that time? Maybe if we had, let's say, Gujarat, in addition to Chennai, we could have possibly started work in Gujarat.
Yeah, the problem is, every geography has a different set of challenges. Like nobody expected LBT to become a problem for us in Chennai. So, every time we do a new project, there are always some challenges, something that we don't foresee. So we don't want to do too many of these because it is at the end of the day, brick and mortar. We have to physically build infrastructure and, build up the park. So there is a lot of government liaising involved and things like that. So hard to predict how it will go. And every state is different. The challenges we face in Tamil Nadu are different from what we have faced before. And I'm pretty sure if we go to Gujarat, there will be something else there. It's not going to be a cakewalk anywhere. So that's what we feel. And, there are always challenges in this kind of, when we have to build physical infrastructure. So we want to be a little more cautious about it. But yeah, we are always on the lookout for new projects. So now that Chennai has already been frozen, there are some delays. We might get delayed by 1 quarter, 2 quarters. That's it. I don't see a huge delay. I'm pretty sure that the Tamil Nadu government also they have invited us to build this park in Chennai during Jayalalitha's time. So I don't see, and it's still AIADMK, which is still in power. So I don't see a big problem in terms of getting our approvals done. The only sticky point is for us is right now is LBT, and hopefully we will overcome that as well. GST was a big issue for us, and we've been able to overcome that. So I think that will happen.
Understood. So the next question I have is, it's a little more on the number front. So I noticed that for some reason in Hyderabad Park, we are not seeing the non-ticket revenue grow as healthily as we see in the other parks. Is there any particular reason for that?
The base was already high there on non-ticket revenue in Hyderabad, because last year when we started the park itself, we went with dress code, etc. And hence, since the base is high, you don't see the growth as much as what it is in the other parks. In the other parks, the dress code implementation came in later part of the previous year, and hence you're seeing higher growth there. And in Kochi and Bangalore, added to that, on the F&B side, we have taken over some of the restaurants that have been run by our third-party vendors. And that is also giving us an increased non-ticket revenue on the F&B side.
Got it. And the next question I have is on Wonder Pass and other initiatives to probably stay in the mind of the customer going throughout the year as much as possible, because the mind space of the customer is there's a lot of, I think, effort by many companies to get the mind space of the customer. So Wonder Pass was one initiative I think we had last year, but I didn't see that in the website this time around. So some color on that.
Are you done? Question?
Yes, sorry, yeah.
So Wonder Pass, we had done a new version of it last year, but it was not very successful, so we have pulled it back, and now we are going to relaunch it as a new, referral program. So we're still toying with that, the whole referral system and repeat. See, but you have to remember that amusement parks are a very low repeat kind of an activity. We don't go to an amusement park more than once a year. So any kind of repeat reward system has to take that into consideration and then, come up with a plan. So we are toying with a couple of different ideas now, but this year we will again relaunch Wonder Pass and as a slightly different offering and also a referral program and things like that. So that's the plan.
Understood. And any idea to, we are a little far from the city, so any idea to go closer to the customer in the city, something along those lines?
Yeah, so that is part of our direct marketing approaches that we are doing in terms of how do we, make sure that we can reach the customer and tell them that, we are here and this is an option for entertainment and why don't you try us? So that whole trial, to get that first trial, there are, even in cities like Bangalore where we have been here for more than 10 years, there are a lot of people who have not tried us yet. So there is a deliberate attempt now to see how we can initiate more trials, direct marketing initiatives, things like that.
Okay. The last question from me is I believe we had started a cashless system in Hyderabad. Have we implemented it across all parks?
Yeah, so we are developing our own very innovative cashless system because we feel that's going to be a game changer for us, especially when it comes to securing people's money. So we are actually building our own digital wallet system, which people can use inside the park, and it will enable people to spend more inside the park. So because we find that one of the big issues is that people don't carry their wallets when they're on rides or when they're in the water park. So how do they then buy food or buy merchandise? So this is a problem it's a global amusement park problem. And companies like Disney and all have spent huge amounts of money. In fact, I think they've spent more than $1 billion developing their system. But we've been able to develop a system at a fraction of that cost. And now we are piloting it in Bangalore and Hyderabad. It's still it's not final. We are still piloting it. But once it's ready, we will be able to roll that out to everybody. Every visitor who comes to the park will have an RFID band and, load money onto it, and they can use that inside the park. And I think that's going to be a huge change for us again in the future. But that's still at least 1 or 2 quarters away in terms of, it's not fully ready.
But then we are doing it in all our parks, but in a smaller scale.
Yeah.
What we're trying to do is to get all the customers into a wallet kind of a concept. Today, our bandwidth to handle all the customers is limited given our hardware and...
our IT systems needs a lot of relook, and they're doing that. We are going through that. We already revamped our whole ERP and our accounting, the software. So that was the first step. Next is to revamp our customer-facing software, whether it's booking online or wherever we can eliminate queues and so people can book tickets on self-kiosks so that they don't need to stand in line, so things like that. So we're working on a lot of those kind of initiatives. And then one of the key things that we are developing is also this RFID thing. We will be launching it at some point soon.
Oh, this is quite exciting, and I'm really looking forward to that. I'm assuming that this will be a part of the ticket pricing, and the customer doesn't have to pay anything extra for.
Yeah. So we were trying to make it, if possible, at a sub 10 rupee kind of a thing, so that nobody needs to pay extra money for it.
Great. And one last question, sorry, from my end. Are we organizationally? I mean, do we have the management bandwidth? To go into the next case, because you were mentioning that you are rationalizing management and workforce. So I believe 2 years back we made hires because we wanted to scale up the organization to the next level. So just a little more color on that would be great.
Yeah, no. So we had made some hires, but some of those changes had to be re-looked at because we were not seeing the results that we wanted to see. But having said that, we have learned from that, and then we are a growing organization even today, so we're still hiring. It's just that we are looking at it slightly differently. So we are, I think we have the bandwidth in terms of to do up to 2 parks. Now, once we have the Chennai also up and running, we will have a huge enough workforce that will help us maybe build 2 parks simultaneously. So yeah, we're working towards that as well, yes.
Okay, thank you. That's it from me.
Thank you. Next question is from Abhishek Ranganathan from Ambit Capital. Please go ahead.
Good afternoon, Arun.
Hi, Abhishek.
Hi. Just one question on pricing. I mean, you're saying that the focus has to be on footfalls and you'll want to hold prices for 2 years. Till what level would you be willing to hold prices? I mean, let's say footfalls are not incommensurate with what you expect. Would you be willing to drop prices?
So we have already dropped prices by 10%, and that has, and then we are marketing that very aggressively. So that has already shown us positive trends in terms of, for example, Cochin is our most price-sensitive market compared to Bangalore and even Hyderabad. And we have seen a good uptick in footfalls in the last couple of months, summer months. So if we are able to, so hopefully that will sustain for the rest of the year as well. Of course, Cochin has also a higher proportion of group sales, which is schools and colleges. So they are even more price sensitive. So we have to wait and see how that works out. But I think our pricing is very aggressive now and it's very competitive. I don't think big park, our pricing is like for example, the local parks here, they are charging $800-900, and our pricing is $1,100-1,200. So, our pricing is pretty aggressive in terms of, it's very difficult for a small park to further reduce their price and remain profitable, whereas we are able to do it because our capex is comparatively lower compared to the other, parks which have big rides like we do. So that way we have that flexibility to play with pricing, I think, compared to other players, and we will definitely use that tool as well.
Yeah, adding to what Arun said, what we have done in this season is also to split prices between peak and normal season, and in the peak and normal season between weekend and weekday. Earlier we used to have only a regular day and peak day pricing. So now we're being more aggressive on the weekday pricing so that our footfalls can improve there. While, weekend is a day which is available, it's a disposable day for people and they will still come to the park on a weekend. So we're trying to be more aggressive on the weekday pricing so that we can get more footfall. So that way we have also rationalized our entire pricing strategy to enable customers to use the pricing benefit which we have given during the weekday periods.
So basically the price correction has been largely on the weekday side.
Yes. So weekday and so it's been both between peak and normal,
yes,
and weekday. So but we've been more aggressive during weekday pricing.
More aggressive during weekday pricing.
Yes.
And the reason I asked is the willingness, because this is a peak season now. But in the non-peak season, if need be, your willingness to drop prices, particularly weekday, would you be open to that?
So Abhishek, Arun said that we don't want to make too many changes in the pricing, because that was also one of the reasons last year that we think we lost customers. And hence, confusion. Yeah, and created a lot of confusion there. And we might have, so we would still want to stick to our pricing, which we have determined at the beginning of the year.
Yeah, we don't want to change pricing mid-year, which that creates a huge confusion in our, the whole chain of sales agents and, tour operators. It creates a lot of, it creates a lot of friction. We have to update a lot of our leaflets, flyers, websites. It's just too much. It is actually, and people are confused about pricing. What is the real pricing? So that creates. We definitely want to avoid that.
And we think we have had a very aggressive pricing even for a normal season period. I think it should work without any further change in the pricing strategy.
Sure. And secondly, just commentary on the entire RFID wallet piece. Just a broader question: wouldn't you be better off just integrate with Paytm as your wallet and just partner with them and do it? And most of the customers may have a Paytm wallet. And
Paytm doesn't have an RFID cashless system. This is an in-park system which needs a special tool where Paytm works on an app or a mobile phone.
And it's also expensive that way, Abhishek.
Yeah, why would I part the revenues with Paytm when I can develop this on my own?
Yeah.
And this is purely for in-park spends, right?
It's a closed-loop program completely.
Closed-loop, and most of the companies I've seen abroad also, they are developing this on their own. It's just that we have been able to do it at a very, very minuscule fractional cost compared to what like a Disney or somebody else has been able to do. And I think we have a great system that we've developed, and hopefully we can roll it out in time.
Sure. That's it from me. Thanks. Good luck.
Thank you. Next question is from Anuj Jain from ValueQuest. Please go ahead.
Hi, Arun. Thanks for the opportunity. I have a small query on the balance sheet side. On the balance sheet, I can see intangible assets of 5.5 crores as of 31st March 2018. Can you explain me what is this?
Films. These are
content.
Sorry?
Content.
Film.
Okay, understood. Regarding that Mission Interstellar, right?
Yes. Maybe the movie for that, I think, costs us about 3.5 crores, something like that. Yeah.
Okay, fair enough. Thank you.
Thank you. Next question is from Rohit Chavan from GEPL Capital.
Yeah, thanks a lot for giving me an opportunity one more time. So I have two follow-up questions. I wanted to understand what will be our Chennai park capex.
We're looking at about 350 crores.
350 crores. And land size would be?
Land size we have already spent about 75 crores we have spent, and 62 acres is the land size at this point of time.
Okay. Wonderful. And one more question I have about is of footfall growth. So how much footfall growth we are anticipating for next 3 to 5 years on a CAGR basis for our Hyderabad park? Because
it's been a very different. I can't predict a 3 to 5 year footfall growth, but we have given very aggressive targets to our park this year. 13%. Footfall growth is what we want this year. It's a very
right. No, because I was asking from the perspective of, because Hyderabad park is at 7 lakh footfall, 6 to 7, and Bangalore or Cochin are at higher side of 10, 12. So I was wondering whether Hyderabad park will grow much faster than that of the Bangalore and the Cochin park.
Hyderabad will definitely grow faster. In fact, Hyderabad is growing at double digits already. But we want double-digit growth in all parks this year because we have lost footfalls in the last 2 years in the older parks as well.
Right. So we are also expecting double-digit growth for the remaining parks as well, Bangalore and Cochin as well.
We want that. I mean, it might take 1 or 2 quarters for that to kick in, but we definitely want a bump in our footfalls.
Yeah. Okay, sir. Thanks a lot.
Thank you very much. Due to time constraints, we'll take that as the last question. On behalf of Axis Capital, that concludes this conference.